Ron Costa, broadcasting live in the Mappable USA studios in Las Vegas, where we put you on the map. And folks, I got to tell you, this whole thing about crowdfunding continues to explode, real estate crowdfunding in particular. And we've been on this opportunity zones target for quite some time. We're going to continue with it today. And because of that, we got to bring in Vicki Hutchmala from the QOZ Marketplace. Vicki, how are you today?
I'm outstanding. It's now warm. It's summertime in Vegas. What could be better?
Yeah, no question about it. And I'm sure that you've seen the same thing that I'm seeing. Every time I go online, there's some news about opportunity zones. Everybody's talking about it. A year ago, no one knew what it was. It's amazing, isn't it?
This is a true fact, Hal. And now that the rules and regulations have come down to be more specific, people are not as afraid to get involved in it. Plus, this week, we also are having an Opportunity Zone Expo in Las Vegas with several speakers and presenters, one of which our guest is going to be there to discuss it further. So we're looking forward to that as well.
Yes, and speaking of our guest today, we're going to talk about something today that, boy, nobody likes to talk about. I'm telling you, it's the T word, taxes. Nobody likes taxes, but that's one of the reasons why opportunity zones can work. And there's a lot of misinformation out there. So today, let's bring in Blake Christain. He's a CPA tax guy out of HCVT out in Park City, Utah. Blake, how you doing today?
Doing great, thank you. Glad to be on.
Yeah, I'm sure your phone is ringing off the hook with everything that's happening with the opportunity zones these days, huh?
Yeah, there's a lot of questions, and the new regulations coming out a couple of weeks ago is definitely, I think starting the floodgates to open in this area.
Yeah, we've done a couple of podcasts already regarding these opportunity zones and the opportunity zone funds, and basically how easy it is, just to create one. You can create a fund out of nowhere, but there's a lot of things that people have to take care of and be weary of with these funds and with these investments. It's not just as simple as buying a condo or something. These things get to be a little dicey, especially with the new guidelines. Do you find that a lot of people now are really even more confused with these new guidelines, or has it opened up more questions, or what are you seeing over there?
Well, it's a mixed bag. I think clearly the new regulations are fairly taxpayer friendly, but there's a few elements in it that make it fairly complex to run these, and the setup is going to be the easy part and meeting all the qualifications, but running these and evaluating the qualification tests, and there's multiple qualification tests that you have to run every 6 months, and then the wild card is, what if you fail these tests sequentially, and they've reserved guidelines on that, so you don't even know if you do have somebody that misses the qualification tests, for a couple of periods, are they going to lose completely their Oz status, or will they just up the penalties, which essentially run at 6% for the period of time that you're out of compliance? So there's a few open issues, but they did a very good job. They were very thorough in this latest round of regs, and again, fairly taxpayer friendly.
Yeah, before we get into that in more detail, let's talk about you. Tell our audience your background and how you got into opportunity zones, et cetera.
Right. So it was almost I kind of got elected to head this up for the firm. So for the last 20 years plus in my 39-year career, I have focused on federal, state, and local tax incentives, which range from enterprise zones, green credits, hiring credits, et cetera. And so when the program first came out, or was announced at the end of 2017, I got a ton of calls internal from my other partners as well as from outside parties saying, hey, tell me how this opportunity zone credit works. And, so I had to explain to them, it's not a credit, it is a very powerful tax incentive, but it's not a credit. So again, it was just the volume of questions received. I had to get up to speed fairly quickly on it.
So you became the expert in the firm.
Right. But I would say that again, in my 4 decades of being a CPA, this is by far the most powerful tax provision, and certainly the best economic development tool that I've seen in my career. And it's I think it's very well designed and offers some great incentives, and hopefully people are going to look back at this if people do this right, and these economically challenged areas will blossom under these guidelines.
Why do you think it's such a powerful tool?
Well, it's I do like now private equity firms don't like the fact that it's a 10-year kind of maturation process in the investment, but it forces investors to take a very long-term view of development, and it also it forces both government agencies and the private sector to be at the table and work together. And I think that's going to really be part of what determines whether this is going to be successful or not. And I think you're going to find some cities and counties that really embrace it and are creative and reach out to the private sector developers and business people are going to do a lot better than those that just sit back and wait for people to come to them.
So in terms of redevelopment of the community, which is basically what opportunity zones, what the purpose is, do you think that because of the opportunity zones, the programs and the whole parameter of opportunity zones will have a greater impact on actually elevating the economy, elevating the lives of the persons that live within those zones, more than anything that in terms of just somebody just regularly investing and doing something, will these opportunity zones have a greater impact on the end user person who lives there?
I definitely think so. And there's, part of the second set of regs that came out, they provided commentary and are asking for additional input on, gathering information that you just spoke of. How much is it going to rise the tide for everybody in the community, how many jobs are created, and that information isn't in the code right now, but is going to definitely be layered in. HUD is asking for that information also. And so I think that again, developers that put that into their business plan are going to find very receptive, planning people within the city government and things, probably more readily approving their projects than they might if they just start trying to come in there and capitalize on a tax program.
We know that opportunity zones have a finite period of existence, and we also know that there's pending legislation at the federal level to extend the end date. Do you think that's going, because opportunity zones will be so as successful and powerful a tool as you believe, do you think that the likelihood of the whole program being extended another 10 years or longer would have a greater impact or even a possibility of being passed?
Yeah, I would definitely like to see the 2026 in date for making the initial investment extended. At least 5-10 years would even be better, because the real estate projects are going to take a long time to get, or many of them to get entitlements. I push very hard on my clients to take a look, and probably half of my clients are setting these up to run operating businesses. And I think actually the tax advantages and the employment expansion in these areas is going to be even greater. I mean, if you do a real estate project, for the most part, you're going to create a lot of construction jobs. And granted, if you have retail and mixed-use space, there's going to be jobs that follow. But I would rather see a high-tech operation, light manufacturing, heavy manufacturing in these areas to really, and then you can hire the local workforce. And so that's the real win-win. So I would like to see half of these be operating businesses and maybe half the monies go towards real estate projects. But if it's just somebody, puts in a hotel and then gets out of there, that's less exciting to me than somebody starting a third business. With the serial entrepreneurs really like this, and that's who I'm talking to a lot on these.
Yeah, I agree. I agree with that. I think one of the things that these new guidelines that just came out address specifically that, and they made it a lot easier for a lot of these businesses to qualify as opportunity zone businesses, which is great. And getting back to your point again, this is really looking at it at a long-term perspective versus a short-term. I think a lot of people who are looking at something like, let's say, Regulation A crowdfunding, they see the stocks kind of tanking, and I have a feeling a lot of people just kind of got into it, make a quick buck, and get out. That's what they wanted to do. But in this situation, you really have to look long-term, because if you're trying to do this on a short-term basis, I think you're going to be very disappointed.
Absolutely agree. And just one clarification, I said 2026, that's when the tax is due on the deferral. 2028 is going to be the end period to make the investments.
You think it's likely that if they do extend the period, that more investors will get involved and create more funds to take advantage, just because there's a longer time period, where if it's a short, finite period, it's going to keep people away, just for all the things that you said regarding real estate and business development?
Yeah, and especially if you're dealing, certain states, some highly regulated and hard to get, real estate projects off the ground. 10 years is not that long. So if the bigger the project, the longer the entitlement period. So I do think that more money will come in if you extend it out. Right now you can hold the investment till 2046. So it's that part of it I don't think is that big of a deal to extend, but I would like at least a 5 and preferably 10-year extension of the period that you can roll the gain.
So let me ask you a question in terms of your expertise, being a CPA. If someone was interested in investing in a fund or creating an Opportunity Zone fund, what do you think is the most important thing that they should consider or be aware of or very educated about before they even do something, before they take any action?
Right. Well, I think very, very good question. And what I tell people that ask me this is, first of all, if you don't have at least $1 million to invest personally, then I would not set up my own fund. Now, the funds that we've set up, probably about 3/4 are what I would call kind of family office funds, and it's really just one person or a small group of family members that had a large gain and roll it in. The other 25% is represented by what I would call kind of more of a public type fund, and but again, the cost of setting it up is not a whole lot, but the maintenance cost and the testing and running your project, if somebody's got a few $100,000, I don't really feel that justifies setting up your own fund unless you're going to build on it over years. You can put more money in later. So those smaller amounts, then I do suggest people look at, again, what I'd call some of the other, larger funds where they might just own, 2 or 3% of it. But you really have to know the promoters. You have to know that they've got the right team in place, and it's a real mixed bag of projects that are out there right now and fund managers. So you really need to know that they know what they're doing.
Well, and this is something that Ron and I are initially starting, is we're trying to develop a website that's called the Opportunity Zone Authority that does just that for the person that has $100,000 or $500,000 or something. They don't want to create their own fund, but they want to invest in a fund, and we're trying to go through and find the funds and make sure that they're being managed correctly, that they have followed all of the rules and regulations, are compliant with everybody, that they know about the tax consequences at local, state, and local areas, so that they can feel confident that investing in this zone is going to actually do something to their benefit down the road, which it appears that there's, everybody now is like, everybody knows a little bit about it, and that's very dangerous when you know a little bit about something and try to take on the whole project. That can come back and bite you.
Right. You want to make sure they have a team of attorneys that understand it, CPAs, and most importantly, I think, is the developer, if it's a real estate project or if they're going to invest in active businesses, that you have people at the helm that have proven track records of developing businesses.
So talk to us about the consequences of taxes at a state or local level.
Right. Excellent question. And this is something that's really getting overlooked because everybody's so enamored with the project, and they're running out projections and saying, boy, look at these returns. And I'm going to hit a grand slam here. And one thing to remember is not every one of these projects is going to be successful. You still just have the risks of business. But the state issues, now there's right now about 32 states that have adopted fully the Opportunity Zone program. Some of them have different effective dates. So you really have to look at your state of residence and before you jump into this. So one of the big ones is California, and California has not fully adopted the program. Actually, they haven't adopted it at all yet. There are several pieces of legislation in both the House and the Senate that will conform in various manners. So I encourage people in California to contact their representatives. But we should know, hopefully within the next couple of weeks, the level of conformity. The Governor Newsom initially said that he would support conformity with respect to low-income housing and green projects, and pretty much the rest of it he was not really on board with conformity. Fortunately, the Senator Hertzberg has introduced a couple of fairly comprehensive packages that would have much broader conformity, but there's also a lot. There's a fair amount of detailed reporting that you were talking about earlier about how is this going to impact the community. What's the bang for the buck for the state and the local communities. So hopefully we'll have some broader conformity than Governor Newsom had initially announced.
Blake, does that mean that some of these Opportunity Zone funds that say that they are investing nationwide, for example, really aren't doing anything in California or can't?
No, very good point. People can still invest in California. There are, 10% of the Opportunity Zone census tracts are in California. So people can invest whether they're a California resident or outside the state. It's just that when that project is sold, if it's a real estate project, that owning real estate in California is going to give what's called tax nexus to that taxpayer, and they are going to have California-sourced income even if they're not living here. So a Nevada resident or a Texas resident who would normally have a zero state tax rate suddenly is going to find themselves, if they hit a grand slam, they could have a 13.3% tax on what they thought was going to be tax-free. So you really have to look on a case-by-case basis. Where is your state of residency? Where is the Opportunity Zone project? And what legal form is that in? Because if it's a flow-through entity, you're absolutely going to have nexus. If it's a C corp, and then the exit was selling the C corp stock, then you may not pay tax in that other state. So it gets very complicated. And it also depends, is it an operating business or is it real estate? Again, real estate is going to be a lot harder to dodge that nexus and the tax bite in that other state.
Right. And now, you're being in Park City, did you say, in Utah? Do you work with clients from all over the country?
Yes, I've got a high concentration in California. I'm doing projects down in Salt Lake. I've got projects on the East Coast, and so they're all over the place. And,
well, I would imagine
let's not forget we got Puerto Rico and Guam too.
The whole, all of Puerto Rico, right? The entire place.
Yep.
I believe.
Well, yeah, there's about 10 census tracts there that are above the poverty level, but so it's not the whole island, but most of it.
Well, in Virgin Islands as well.
U.S.
Virgin Islands.
Yes.
Yeah. Well, I would imagine if all these people who are listening to the podcast right now, I bet you they all have tax issues, and they can all, definitely get in touch with you. Blake, how can people get in touch with you?
So phone number, I'll just give my cell phone number is the best because I travel a bit, 562-305-8050. Our website is HCVT, that's HarryCashVictorTom.com, and you can get all my email information and things there.
Awesome, that's great. And speaking of traveling, you're going to be here in our parts this week, right, for the Opportunity Zone Expo?
Yes, looking forward to that. I'll be presenting on Thursday, going over with a panel all of the fun testing that you have to do every 6 months.
Oh, boy. Yeah. I'm telling you, there's so many little intricacies there everybody has to be aware of. And just like anything else that's good, it's not as simple as it sounds, right?
No, but I think it's worth it, but it's not for the faint of heart.
Yeah.
Well, let me ask you one last question, Blake. Would you say that it would be easier in terms of opportunity zones? Would you say it would be easier to invest in a fund or to create the fund?
Well,
from your point of view.
The simple answer is if you have a quality fund, piggybacking off of an existing fund and letting them run the gauntlet of testing and running the day-to-day project is always going to be the better answer. But if you have a serial entrepreneur or if you have a real estate developer that has a track record, those are perfect for somebody to just take their large capital gain and roll it into their own fund that they manage. But you better be a real estate expert or a proven, entrepreneur that can start businesses and run them if you're going to do it yourself.
Oh, okay.
Yeah, agreed. That's a good piece of advice. And again, folks, if you want to read a really good article on this, you got to go to Blake's website. It was again, he mentioned hcvt.com. There's a page there, an article. It's called "The State of Opportunity Zone Investing," and that is a great read. We'll link it in the show notes, so you can just click on the show notes. It'll take you right there. But Blake, that's a really, really great informational piece on some real good overviews on what we're talking about today.
Well, I'm glad I had the opportunity to share that with you, and thanks for your excellent questions.
Yep, and we thank you again for being a guest on the show. I really appreciate you taking out the time to talk to us. We can't wait to meet up with you at the Opportunity Zone Expo. Vicki, anything else before we sign off? You got everything?
I think we kind of touched on it, and we'll have to have Blake come back and do a follow-up podcast maybe after the expo so we can expand on what we talked about today. Taxes is a broad thing that if you don't understand, oh my goodness, the tax man's going to get you.
Oh yeah, the audit, the IRS audit activities on these will be interesting.
To say the least, exactly. Well, it was an excellent podcast. We enjoyed talking to you, Blake, and absolutely we look forward to meeting you and hear your presentation this Thursday in Vegas at Mandalay Bay. And any of our listeners out there who haven't registered can go to our Mappable USA website and register to go to the expo and receive a $100 discount on tickets.
Yes, and that whole discount is also available on the QOZmarketplace.com, so you can check that out as well. Folks, thanks again for listening to the MappableUSA.com podcast. We want to thank our guest again, Blake Christain, for being on the show. We want to thank everybody out there for listening to us. Again, we're at MappableUSA.com. If you scroll on that page, you'll see a whole syndication sources. Just click the one you like best. Subscribe so you never miss an episode. And if you want to be a guest like Blake was today, there's a guest tab up there. You just click on the guest, and we'll see about getting you on the show. So thanks again for listening, everyone, and have a great week. Thank you.